Hey guys, welcome. Guys, we'll get started shortly here. Welcome everyone. Welcome every guys. Welcome guys. Welcome everyone. We'll get started shortly here. Hey Tylac, how are you?
Good. How are you doing, David?
Good. Welcome. We'll get started shortly here.
Okay. You know what? I just realized I forgot to respond to your message last week about last Friday's one-on-one. I was in India. I just got back last night.
Oh, you did? Okay.
Yeah. Okay.
Welcome back.
Thank you.
Yeah. So,
how have you been?
Good. So we'll talk about rescheduling that. No big deal.
Okay. Sounds.
No big deal. All right. Welcome, guys. We'll get started shortly here. Hey, Peter. Welcome.
Hey, David.
Hello. All right, guys. We'll get started shortly. All right. Welcome, guys. Welcome. We'll get started shortly. Hope everyone had a great weekend. Hey, Terry. Welcome, Terry. Welcome. Guys, we'll get started shortly here.
The biggest series premieres live on HBO Max. Watch critically acclaimed series like HBO original Euphoria, starring Zendaya, or new drama series Winning Time: The Rise of the Lakers Dynasty. Plus, stream Max original Peacemaker, starring John Cena.
Guys, we'll get started shortly here.
Then catch the most anticipated blockbuster of West Side Story, premiering on HBO and HBO Max. Discover all of this on HBO Max for just $9.99.
Stone Cold Steve Austin here. NFL teams to turn to cold water washing with Tide. Sal, your uniforms get dirty. Tide can handle it, even in cold.
All right, guys, we'll go ahead and get started here. As you guys know, this evening, we're gonna go over cryptos and Forex. Okay, so cryptos and Forex. All right, we've got a lot going on in the Forex market. All right, and we've got a lot going on in cryptos. All right, so I'm gonna go through this, and then you guys just ask me any questions that you guys might have. Any concerns. We'll be looking for trading opportunities, especially in Forex. Hey, Stella, welcome. All right. Hey, Madison, welcome. Jamal.
Hey, how are you?
Good. Hey, Jamal, welcome. All right, guys. So you guys should see, let me share my screen here. 1 second here. All right. All right, so you guys should see my trading screen, right? Cryptos monster there. Looking at the chart for cryptos, right? You notice that Bitcoin, guys, Bitcoin has gapped down, okay? Bitcoin has gapped down for the evening here. 1 second. All right. So we notice that Bitcoin has gapped down. All right. And Bitcoin is currently trading at Let me bring in my cursor here. Bitcoin is currently trading at 38, right? So 38,320 currently. All right. Can you guys see that right here? You can see my cursor. You guys can see that Bitcoin. Okay. So Bitcoin is in the markdown phase. Okay. So Bitcoin is in the markdown phase. Okay. So we need to be careful, guys. As you know, those of you who've been with us for a while, as you know, when Bitcoin is in the markdown phase, we need to be careful. All right. And Bitcoin is the barometer for the entire crypto market. So as Bitcoin goes lower, so will most of your cryptos. Okay. So we want to be careful. We do not have a buy signal on Bitcoin. All right. So we do not have a buy signal. Right. Here was the last buy signal here. This blue arrow here. Here was our sell signal. We did have a sell short signal. So let me bring that in. All right. So we did have a sell short signal that actually closed. All right. All right. So that's that sell short signal closed. All right. All right, so here was the sell short signal right here. That closed, right? So our price is back down in this area in here. We'll look for Bitcoin to test, all right? We're still looking for a retest at 30,000, okay? And I know it seems like that's far away. 38,000 is where we are right now, but Bitcoin can get down, move down pretty quickly. Okay, so we've got red candles here. All right, so red candles here. It's clearly in the markdown phase. All right, so right here is what we're looking at. This is a daily time frame, guys. This is a daily time frame. So we've got red candles, gap down right here. Now, like I said, it's at 38,331 right now. Near-term support, I would say near-term support, which is right in here, right here, right here. So that's about 36. All right. So if it breaks this 36 mark, if you look here, right here is where your support is right here. I won't count this. This is just a low right here. All right. But this is your support right here. Right here is your support. If it breaks that 36, then the next support is going to be 30,000. We've been watching this 30,000 mark for a while. All right. So just keep an eye on that. All right. A lot has to happen, guys, for us to get back in buying territory. All right. With Bitcoin, we've got to get above this resistance in here to even consider Bitcoin going long again. All right. So keep that in mind when you look to trade cryptos. And remember, Bitcoin is the barometer for the entire Forex crypto market. So as Bitcoin moves lower, so will most of your cryptos. All right. Any questions on this? Any questions on this?
So I got a question.
Yes.
So what exactly are like supports and stuff like that?
Okay, support and resistance are these levels here. All right. We have another class. Is it Eben?
It's Eben.
Eben? Hey,
Yeah.
Eben, welcome. We have a beginners class on Tuesdays. That's a really good class to come to. But basically, when you look at support and resistance, just think of support as the floor, right? So where you're sitting right now, your feet on the floor. So think of support as your floor, your ceiling as resistance.
Okay.
Okay, so we want to buy when the price breaks the ceiling. We call that resistance. Okay, kind of like right here. You see that line right here? See that line right here? I know it's hard to see. That's our resistance.
Okay.
And you see this line right here? That's our support line. All right. So support and resistance is made when price touches that area a minimum of twice. Okay. So a minimum of twice. When price breaks resistance, that means the buyers are in control. So we want to be buying. These green candles here tells us that the buyers are in control. Okay, you see that? Okay. So green candles buying when the price breaks resistance, when the price breaks the support, like right here, you see this, the price broke support right here, this line right here, then the sellers are in control. These red candles means the sellers are in control. All right, so support and resistance, that's the key. It's a big deal when we trade. So we always want to buy on a break of resistance, sell on a break of support. Okay, if we have some time at the end, I'll go through that more. Okay, and I'll give you guys some charts that you can take some pictures of. Okay, any questions on Bitcoin? Any crypto question? Jamal, you had a question?
Yeah. So will you be scalping on the daily chart, or are you going to scalp on a lower time frame?
In which Bitcoin?
Yes.
In which direction?
So if we go to like a lower time frame, we can scalp like the 15-minute chart or the 5-minute chart. Yeah. Or are you taking most of your trades just on the daily chart?
Yeah, so we'll watch Bitcoin on the daily time frame. We normally trade. We have different markets and different systems, so different time frames. You can trade on a 15-minute or a 30-minute time frame. I prefer the 30-minute. There isn't a lot of noise on the 30-minute, okay, compared to the 15-minute. So what you would do is basically you would do something like this here, where you would watch the daily for direction, right? So we want to look at the daily to find the trend on the daily, and then scalp on the time frame 15 or 30-minute in the direction of that trend. So for Bitcoin, for example, right, we know it's going down. All right, it's in the markdown phase, it's going down. So you can look at a 30-minute to take trades only to the downside. Okay, I wouldn't trade it long. I wouldn't trade it up. Okay, because the price right now, the trend is down. So if you guys look here, and that's a good question, if you want to scalp it, right? So let's see here, trend line. Okay, so Jamal, right here, here's your downward trend line here. So price is making lower highs, lower lows, red candles. So yes, you can scalp it, but I would only scalp it short to the downside. That makes sense?
Yeah, it does. So since Bitcoin has traded down so much, do we know if like it's in a premium market or if it's in a discount market?
Okay, what do you mean by that?
So like when it goes up to the top, obviously it's in a premium. So it's good to sell when it's in a premium. Since it has gone down, so let's see, what is it at? What, 43,000?
30 right now, 38,000 change. Yeah, 38
so change. Would it be considered in like a discounted market and be considered a good time to buy, or are you looking for to take out certain liquidity before you start buying?
Where we would want it to Eben, is it Eben or Eben? Eben. I'm horrible with names. I'm sorry.
No, you're good.
All right. So I know we just went over this. All right, but Jamal had a good question. Where would we, if we're looking at this now, he's asking where would we buy? So if we're looking at the price action right now, where would we enter?
You would look for the support floor at 36K.
Okay, so that's support, but where would we buy? If he wanted to on the daily time frame buy, where would he get in?
The break of resistance?
The break of resistance. Very good. Stella, was that you?
Yeah.
Okay, very good. So Jamal, if we were to buy, we would wait for price to get back up again, and then the buyers would be in control above this resistance line right here. Okay, so it's still in seller's territory. And you got, yeah, you got to wait. You got to wait.
You'll wait for market structure to change.
Exactly.
You'll wait for it to break that and then come back down to enter.
Yeah, yeah. And I'll give you guys, for the new folks here, I'll give you some information at the end. We'll have some time at the end, and I'll give you guys some really good tips. Okay. But good question. Good question. You guys are thinking the right way rather than just jumping in and buying. We want to know, right, the best time to buy. There's always there's a right time to buy and a right time to sell, a right time to go short. Okay.
Cool.
All right. So we'll go over that. I'll give you guys some good information.
Hi,
all right.
David. I had a question.
Yes. Hey, Terry.
Hi. Good evening.
Hi. Good evening.
I was just wondering, why would you buy when it goes back up so much? Like, why wouldn't you buy when it's down at, you know, at the floor by 35?
Okay. So
Thank
you guys, thanks, Terry. You guys have a lot of questions on this. So Forex isn't doing much. So let's just get into this. All right, let's just get into this. All right. So I'm going to share some charts with you guys here.
No.
All right. Okay, the first chart I'm going to share is support and resistance. Okay, so did you guys see that chart, support and resistance?
Yes.
Okay, go ahead and take a picture of it. So everyone, if you guys don't have this, take a picture of it on your phone. All right, support and resistance, the keys to your success. Right, support and resistance, the keys to your success. So take a picture of that. I recommend you guys print it out and have it laminated. Keep it with you at all times. It's that important. All right. For our current traders, the traders that are with us, this is always a good practice. All right. So I know sometimes it gets boring, right? But it's always good to get a refresher. All right. And remember, this is what we do every day. All right. So it's important. All right. So for the new folks, support and resistance. So think of resistance, this green line here, that's your resistance. That's your resistance. Price has to touch that green line. This is your price action right here. All right. And remember, price is not random. There's a method to this. Okay. So here's where price touch this area. Think of this line here as $100. So let's say that price right here. All right. Let's say it's for example, just for an example, say you trade in IBM, and right now IBM at this line, it's $100. At this line here, that's your support, that's your floor, right? That's your floor, right? That's at $50. And price keeps going to the $100 mark, and traders are watching these levels. So we've got buyers are sitting here at the resistance level here. And you also have sellers that are sitting at this resistance level here. So buyers and sellers are sitting right here. The buyers are looking to push the price higher to break resistance. The sellers are looking to bring the price down, okay, and then hopefully break the support. So there's buyers and sellers here, buyers and sellers here, all right? The critical thing about this is that you guys need to know every time where your support and resistance is. because that's when you will execute the trades. So I always ask, okay, David, where do we buy and where do we sell? Well, we always buy on a break of resistance because that's when the buyers are now in control. Okay, that's when the buyers are in control, when the price breaks resistance. When we short, Jamal, so if you wanted to go short, right, we want to go short on a break of support when the sellers are in control. So we want to buy at resistance, sell at support. So write that down, please. Write that down. We want to buy at resistance, sell at the support. All right. You guys will hear the opposite out there. Okay, you will hear the opposite out here, right? Which is the school of thought out there is we want to sell at resistance and buy at support. So Terry, I'm gonna go through that, right? Because that was your question. Why don't we buy at support, right? Because the price is low.
Right,
All right.
yeah.
All right. So we'll go through that. But
Thank you.
remember this. Always write that down. We want to buy. When we buy, when do we buy? We buy on a break of resistance. When do we sell? We sell at a break of support. Okay. So go ahead.
So this is pretty much like being in a premium, resistance being premium and support being a discounted market. Like you should buy in a discount at support and sell at a premium when it's high.
Yeah. So for this evening, I want you to forget about a premium and all of that. All right. For this evening. Okay. Don't use those terminologies. Okay. We just support and resistance. All right. And this will make sense. Okay. So take a picture of this, guys. Take a picture of this. It's important. Okay. I'm going to share another screen with you guys. Okay. So where are we here? All right, stay with me. This will make sense. All right. Okay. Now this screen here is a bit different.
So are you pulling that screen up, David?
Yes.
Do we buy it or sell at like certain times of the day, or do we just wait till it hit that support and resistance?
Yeah, so you wait until it hits that regardless of the time, okay?
Okay, so no, like not, I know it's like different sessions in the market, like London and New York, but you say it's best just to buy it and when it hit that resistance.
Yeah. Yeah. So yeah, it doesn't. Yeah. So yeah, there are different sessions. There's more volatility in the different sessions, but yeah, it doesn't matter. Whenever the price breaks resistance or breaks support, okay, that's our indications to buy or sell. All right. So you guys see another screen there. It should be. You guys should have my shared screen. It should say trend following. Right? You guys see that? Yes or no?
Yeah, we see
Yeah.
it.
Okay,
Yeah,
very
we see
good. Okay.
Yes.
Yes.
Okay,
yes.
so trend following, right? Okay, so guys, this is where it says this line, this dotted line here. If you guys can see my cursor right here, right? That's the break of resistance. So we're going to enter when the price breaks resistance right here. We are going to sell when the price breaks support right here. All right, so here is resistance, here is support. We call this the meat of the trade. Write this down. We call this the meat of the trade. So we're always looking for the meat of the trade, right? M-E-A-T, meat of the trade.
Do you
All right.
mean this because like when you enter the market, it's not going to go down anymore, and when you exit the market, it's not going to go up anymore?
Very good. Very good, Charity. Very good. Okay, and this is where most traders mess up, right? So back to Terry's question, right? Why don't we get why don't we get enter at the bottom?
Right.
Right? And we can't enter at the bottom. Why? Looking at this chart here, why shouldn't we enter? Should we not enter at the bottom here?
Because you don't
Because
know.
price, I'm sorry, go ahead.
Because you don't know if it's going to go any lower.
Very good. That's cool, right? Yeah, because we don't know, it could go lower, right? And because it's still price is still going lower. And I'll show you guys another chart that will make sense. Okay, so we want proof. We want proof, guess what? That the buyers are in control. So we've got to wait till the price breaks resistance right here so that the buyers are in control. All right, we can sell at the very top. Okay, at the very top, like Charity just mentioned, because guess what? Right? Guess what? You guys tell me why can't we get out at the very top?
Because you don't know if it's going to get higher.
To go higher.
You guys are pretty good. Yeah, it could go higher. So we need proof. We need proof that the sellers are now in control. Okay, so we're going to sell at a break of support right here. That's our exit. Buy on a break of resistance. Most traders try to get here. They want to buy here and sell here. And that's a fool's game. You'll never get that. Okay. So this is why we call this the meat of the trade. We only want the meat. We don't want all of it, right? We're not going to get all of it. We just want the sweet part of the trade. And that's our sweet part right here. Buy here, sell here. All right. You guys have a copy of this? They make sure you get you take a picture of this. And like I always say, print it out, laminate it. You want to keep looking at this stuff over and over so that it sinks in. All right. Even for our current traders, we want to keep doing this. Okay. Right. We want to build these habits. I'm kind of glad we're doing this evening. Right. It's always good to keep doing this. So thanks, you new folks, for forcing our current traders to go over this. All right, there's another chart I'm going to send you guys. So you need all three. You need all three. Okay, this is like a puzzle we're putting together here. We're making a cake here. We're making a cake. All right, so the next one here is the 4 market phases. Okay, so take a picture of it. Do you guys see it right here? The 4 market phases that every trader must know. You guys see that? All right, take a picture of that. Take a picture of it and laminate it. Keep it in a safe place. Keep it in your trading area. All right. The 4 market phases that every trader must know. All right, so first we started, and I know we're going through this stuff pretty fast here, but you guys are pretty quick. You're picking this stuff up pretty quick. All right, so we're going to take support and resistance, which you guys know, right? We have you guys saw the trend follow it, right? We want to get the meat of the trade, right? We want to get the meat of the trade. Now we're going to talk about how we go through that cycle, that trading cycle. Okay, when do we get in? When do we get out? All right, and all of that good stuff. All right, so the 4 market phases that every trader must know. Okay, so you guys should have taken a picture of this. The 4 market phases that every trader must know. If you guys understand this, you will never have a concern about where to get in, where to get out. All right. And to Jamal's question, right? Where should I be shorting? Should I be getting in and all of that? Okay. So this will give some clarity. Okay. So here, we're going to first start with the accumulation phase. Okay. The accumulation phase. That's when price has dropped. So price came from a high, right? Price came from a high. All right. And it's usually that accumulation phase is sometimes at the left of your screen, the middle of the screen, sometimes the right of your screen. Okay, but just think of accumulation as consolidation. Right? So consolidation, price is between support and resistance. Price is between support and resistance. It's not trending, it's kind of stuck between support and resistance. Here is your resistance here. Here is your support here. That's the accumulation phase. The next phase is the markup phase. So that's your trend, right? Price broke resistance right here. The price broke resistance. This is your price chart right here. All right, just follow me. Price broke resistance. Who is in control right now when the price breaks resistance?
Buyers.
The buyers, very good. Okay, so the buyers are in control. That's the markup phase. So we buy. We buy, right? We buy, right? And we hold, right? So that's the markup phase. That's where we buy. All right, but we only enter the trade when the price breaks resistance right here. When the price breaks resistance right in here. All right. Price moves higher. This is the markup phase. The third phase is distribution. All right, distribution. So Charity had mentioned that, hey, the price can't go any higher. So when the price can't go any higher, right, which is what most traders try to do, right? They try to get out at the top. We can't do that. We're not like that. All right, we're a bit different. So now we're gonna wait for when the price breaks support. This is your support line right here. Price breaks support. Who is in charge now?
Sellers.
Sellers are in charge. So now the sellers are in, we've got to get out of the trade. All right, so we bought here, sold here, and this is called what of the trade? The what of the trade?
The meat of
The meat of the trade. Very good. You guys are great. Okay, once we get out, guys, this is called the markdown phase. So now our price is going lower. This is called the markdown phase. All right, so phase 4, that's the markdown phase. Within the markup phase and the markdown phase, there is reaccumulation. So that's the middle of the trade in here where we could add it to our positions. All right, Jamal, if you wanted to go short, right? Redistribution, right? On a break of support. Remember, we were looking at Bitcoin, right? A break of support is an area where you would go short. Okay, you would go short on any time frame.
Quick question.
Yes.
I guess you kind of just answered it. Since price is fractal, does this model right here happen on every time frame?
Very
or is
good.
it just a daily time frame?
Very good. Very good. I'm liking you guys this evening here. You guys are thinking. So this right here, let me repeat, right? This right here, the 4 market phases that every trader must know. You guys need to know this, right? Happens on every time frame. That's the cool thing about this. It happens on every time frame, any price chart. So you can take any price chart, doesn't matter, right? So you can take Bitcoin, you can take, you know, I made reference to IBM, you can take the Dow, the S&P, doesn't matter, all right? It doesn't matter. Every price chart will fall within, somewhere within the 4 market phases. Either it's going to be in the accumulation phase, markup phase, distribution, markdown phase. This is the cool thing. Your job, you guys' job is to find out where price is within the phase. Is it in, when you look at your price chart, is it in the accumulation phase? Okay, is it in the reaccumulation phase? Is it in the distribution phase? Okay, is it in the markdown phase, the redistribution phase, markup phase, and that's it. So once you know this, guys, right, it's going to make your job easier. And the idea is this: when it's in the markup phase, we do not want to be shorting. or even getting out of the trade. We want to be in the trade. All right. So it's in the markup phase. We want to be in the trade. We want to be buying, buying, buying. Right. When it's in the accumulation phase right in here, we want to wait. We want to wait for the buyers to come in and break resistance. All right. At the distribution phase, guess what? We want to be, after we get a sell signal, we want to be waiting or we want to be out of the trade. If we're going to go short, right, going to go short, then we want to wait for the markdown phase. So I'm going to take this information here. So remember this. You guys should have a picture of it. Take a picture of it. Okay. Jamal, you had a question?
Yes. Is it true that majority of the time when it's in accumulation phase, it's in the Asian session between was that 8 o'clock and 12
Very
or
good.
midnight?
Yeah, very good. Very good. Yeah. Yes, that's usually the case for Forex. Yes, because we don't have a lot of volume. So when we don't have a lot of volume, the Asian market is the smallest market. So the London session, which opens up at 3, 4 a.m. in the morning, is when that market really starts to go. You're going to get a lot of volatility, and that's when they're going to break out of that consolidation. And then the New York session starts our market. The New York session starts at 8 a.m. in the morning, and then you'll get follow through. Okay, but yes, that the Asian market. So we'll enter the Asian market in a few hours from now, like 7:30, 8 o'clock this evening. And yes, we're gonna have a lot of consolidation before the London session. So good job with that. So I want to take this right here. So you guys should have a copy of all of this. And now we're going to look at some of the charts here. All right, so that this makes sense. All right, so here is let's go back to our Bitcoin chart here, and I'm gonna quiz you guys here. So you guys see Monster Scalper here, the Bitcoin chart. So here is Bitcoin. All right, so this is real live data now. All right, so this is live data now. Okay, so what phase is this?
Markup phase.
Markup phase. Hey, Madison.
Hey.
Hey, very good. Okay, what phase is this? What phase is this, guys?
Markdown phase.
Right
No,
here.
it's distribution phase.
Distribution, my bad.
Distribution. You guys are doing good. Very good. Very good. Distribution. What phase is this?
Markdown phase.
Markdown phase. Okay, very good. What's this area here called?
Support.
Liquidity pools.
So
That's where liquidity sits.
okay, support. Okay, yeah, okay. What phase is this?
Markup.
Okay, markup. What phase is this?
Markup.
What phase is this?
Markdown.
Very good. What phase is this right here? It's a trick one.
That's a distribution.
This distribution.
Accumulation,
Accumulation.
reaccumulation.
So not reaccumulation, just accumulation. Okay. No, it's only accumulation. It's a trick question, right? It's only accumulation because guess what? The buyers got in control, right?
Yeah.
The sellers got in control. What would that be?
Redistribution.
Distribution. Yeah, it wouldn't be redistribution, but it would be distribution. Very good. All right, very good. Let's go through a few more. So we're gonna take a look at Forex here. Okay. So guys, you did a good job. Okay, you guys did a really good job. Okay. What you guys have to understand is that what you guys learned this evening, especially for the new folks, right? That information alone will reduce a lot of stress with your trading. And now you guys will understand, yes, it's going to take some practice, right? You're not going to get it right away. You have to take some practice, but just think about that process. Look at those charts and think about trading. Think of every price chart that you guys pull up, and then just kind of try to work within that, okay, the 4 market phases, and it will give you a lot more clarity. All right, so let's take a look at, I think we're in, which trade are we in? Hold on.
That one, NZD CAD. I think that's the trade.
CAD, yeah, I'm on the wrong time frame here. Let's see here. On the 240 is what we're trading. Let's see here. 240. Okay, so we have a live example here. This is one of the trades that we're in. Stella, you still in this?
Yeah, I got in it and it just dropped. but now I'm feeling better.
You're feeling better. All right.
Yeah.
Good. All right. All right, 1 second, guys. Stay with me. All right.
David, which moving averages do you have on your chart?
These are custom moving averages. I think it's I think it's 20, 25, and 35. 25 there. So we follow, there are other moving averages that you guys can use. We use a tighter moving average because all we want is separation. Okay, so you can use a 200-day moving average. You can use a 50-day moving average. We use a tighter moving average because all we want to see is separation between the buyers and the sellers. Okay, so if you look here, right, this is the markdown phase here, right? That's the markdown phase. The price, right? The price here, the price right here, it's below the red moving average. Okay, so all we want is separation. Just think of the moving average as a road. This is our road here, and we want our sellers to be on this side of the road, and then we want our buyers to be on this side of the road. Okay, so we try to keep it as simple as possible. Okay, so if we're looking at our current trade right now, NZD USD, we got in on a break of resistance. Okay, so we got in on a break of resistance right here. Here was our resistance line right here. Let me bring this out right here. Right here is our resistance line right here. All right. So we're gonna go real time with this trade. This blue arrow here was our buy signal on this candle right here, guys. So this candle right here. This little triangle right here, it's hard to see, but this is where we bought. Right on when the buyers came in, pushed the price higher to break resistance. Hey, Peter, I'll get with you in 1 second. All right. And so now we're in the trade right now. And Stella is like biting her nails because the price keeps going up and down, right, Stella?
Yeah, I got in at, here, let me tell you. So I got in at 5 on, I don't know, on the, I don't know what I'm doing here. NZD CAD.
Mm-hmm.
Yeah. At 0.85263.
263.
Yes, and then it just left me.
Okay.
And that was like on the 17th.
Okay, so you got in right about
Yes.
yeah, right about
Yes.
here.
It was a little after, and then it just kind of like went down from there.
Yeah, so
Yeah.
it's kind of holding right now. What phase is this in?
That's the markup, would that be?
That's the markup.
Yeah.
So for the new folks, what should Stella be doing right now? It's in the markup phase. She's got a buy signal. She's in the trade. What should she be doing right now? Look at your charts, your 4 market phase chart, and your trend following chart.
What time frame are you on?
The 240-minute time frame. But just look at her trade where she is right now. What should she be doing right now?
I would buy.
You buying?
I would buy.
You would buy? Well, she already bought. She's in it.
Buy some more.
I would, I mean, my opinion, I would actually close out the trade until it pulled back some to buy it at a discount.
But she's already in it. So we're analyzing her trade. Okay. So she's already in the trade. So I'm asking, what should she be doing right now? She's in the trade, right? It's in the markup phase. She's in the trade.
Nothing. She shouldn't be doing anything.
Thanks, Peter. She should not be doing anything. All right. She should not be doing anything. When would she need to do something? When would she need to do something?
When it's distribution time?
When it's distribution time, and what how would we know that it's distribution time?
It's the break of resistance.
No, go one more time. Go ahead. When will she know that the distribution phase is here and she should get out of the trade?
Because markup is done and it's entered the distribution, right? And it's going
price starts to consolidate.
Okay, price starts to consolidate, but what else? What are we looking for to exit the trade?
A break in market structure going down.
Okay, which is called what?
A break in support.
Break in support. Sorry
break
about
on
that.
support. Very good. Very good. So we don't have a break of support here. Now think about this, right? Guys, this is what will mess us up. All right. It'll mess up a lot of traders, right? We are in here, we're in a good trade. Right? We're in a good trade because there are no sellers in the trade right now. They're just buyers. We're in the markup phase, all green candles, right? We don't have any resistance. She just broke resistance right here, right? And guess what? There's nothing to do. Like Peter said, right? There is nothing to do. You just hold on. This is a beautiful trade.
Well, let me ask this question. Like you said before, what I had brought up, the market goes in that diagram that you pulled up where it accumulates, it goes to reaccumulation and distribution on every time frame. So before she entered that trade, couldn't she have went to a lower time frame to get in at distribution? Distribution versus getting in where she's, in a losing trade?
Well, it's not in a losing trade. It's only a losing trade when she gets out, right?
Well, yeah, I mean, but could she got it in a better price, like more of like a discounted price to where the trade is actually going in her direction already?
Okay, but then what would she have to do?
Go on a lower time frame,
okay,
like before she entered the trade.
Okay, so she would have to enter on a lower time frame. Then where would she have to exit?
I mean, it depends on, are y'all using stops or you just, because I mean, I would put a stop loss.
Okay, but
right.
Let's just think out loud, right? So when we trade, guys, and this is important, right? We always want to pick, this is called our trading window. Okay, so write this down. You always need to have a trading window where you're going to enter and exit. So you need a trading window where you're going to enter and exit. Can you look at smaller time frames for confirmation? Yes. Can you look for larger time frames like a daily or weekly or even monthly, right? To see to get a better picture of price? Yes. So Jamal, yes. To answer your question, yes, you can look at a smaller time frame, but your execution, where you're gonna buy and where you're gonna sell, you have to pick a time frame.
Got you. So I'm sorry. So y'all are day trading versus intraday trade. I'm sorry. I was looking because I like the intraday trade, and I see that y'all are day trading. So
Well, no, this is not day trading. This is a 240-minute time frame. So we are swing trading. So this is the longer the time frame, right? The longer you stay in
still
the
day
trade.
trading. Okay, I got you. I got you.
Okay.
And
So a day trading would be a smaller time frame, like a 5-minute time frame, a 1-minute time frame, where you're trading intraday. Okay. But it doesn't matter. So whatever the time frame, whatever time frame you trade in, you want to stay within that trading window rather than going back and forth. Now you can go back and forth to get a bigger, a smaller picture. So minimize your time frame, lower time frame. Okay, you get a smaller view of what the price is doing. Increase the time frame, you get a larger view of what price is doing. But when you enter and exit your trade, we want to stay within the same window. I mean, you can do whatever you want, but it's better to stick with your one trading window. All right. Hey, Peter, did you have a question?
I noticed the euros are a lot of them are saying going up. So we should look to go long on the euros, right? See, a lot of it's correlating up.
Yeah, so we are starting to, Forex is still consolidating, guys. So if you look here, if you guys look here, all from here down, all these pairs are consolidating, right? And 1 second here. I've been doing some work on this.
Your top trending one is number 2nd and 3rd. It's Euro New Zealand, and then Euro SEK.
Yeah, it's not right, Peter. 1 second here. Yeah, I've got to change this. Oh, guys, Daniel came in town. Did you guys see that picture? Daniel came to Orlando and spent some time with me. It's pretty cool. All right, let's see here. All right. Okay, so Peter, yeah, we've got so it was set on the daily. So this is the 240 now.
Okay. So
Okay.
we're still good for Euro New Zealand.
Yeah, we're still good. Euro New Zealand. Let's see here. Where is it? What are you looking to do with it?
No, I'm just reading what your scalper tells us. It's still trending up on the 240.
On the 240. Euro New Zealand. Euro New Zealand or New Zealand CAD?
No, this chart right here. So
This
I
one
guess
here?
yeah, on your right hand side it says ranging trending number 2. You see 240.
Oh,
yeah, right there.
Okay. Okay. All right. So this is good. All right. If you notice here, all right, it's trending, but which direction is it trending?
Oh, okay.
What
Trending
phase is it?
down.
It's in the markdown phase.
Okay,
yeah.
got it. So we should go bearish on this one.
Yeah, you should look. I wouldn't go now, but yeah, it's yeah. So this here, it doesn't tell us the direction that it's trending. It only tells us that it's trending. So yes, it's trending. It's trending a lot, right? But it doesn't tell us the direction. We would go here. We would go here to see here. Euro, New Zealand, Peter, right here. See right here, it's down.
So it looks from the chart, it looks like we finished distribution and now it's on the markdown phase.
Yes, it's in the markdown phase. So if we,
I'm a seller, so I
yeah,
don't normally, this is what catches my eye.
yeah. So if we turn on the short signal right here, you'll see it should have a short signal on. So here's our sales. Here's our short signal right here to go short. Right here on this break, that's a perfect short. Okay, so the price, here is our support, guys. Here is our support. The price broke support right here. And this triangle right here is our sell short signal to get out. I mean, to go short. And then we're in the markdown phase right here. Okay, we're in the markdown phase. So you see here, markup. So we should be only buying. These blue arrows, that's our buy signals to go up. Markup phase, distribution right here, consolidation prices. Here was our last buy signal, our sell signal here on this break of support right here. This is pretty cool, right? Break of support right here, bought here, got out here, right? That's called the what? The meat of the trade. Weighted. This is distribution. Weighted. Never broke resistance. All right. We didn't break support until right here. And we got a sell signal right here, sell short signal to now trade it down on a break of support right here. So this is a good example of the 4 market phases. Okay. Accumulation. Follow me, accumulation. I'm going to draw it out. This is perfect. All right, so let's draw it out. And then we'll have a time for a few more questions and we'll close for the evening. All right, so here is support. Follow me. Here is resistance right here. Okay. The price broke resistance here. We got a buy signal here. The buyers are in control right here. All right. Price made a high. Okay. Broke support. We got a sell signal right here on the break of, let me move this, on the break of support right here. All right. Here is our high here. So we bought here, sold here. And now price weighted between here is support and resistance. Price never broke resistance, so we never got a buy signal. All right, it held support. It wasn't until here that the price broke support right here, and we got a sell short signal right here to go short. So markup phase, accumulation, markup, distribution, markdown. You guys see that? You guys see that? So accumulation, markup, distribution, markdown. Okay, markdown. Very good. Peter, you had another question? Peter? All right. Any other questions, guys? Does this make sense? Now, Jamal, you can do that on any time frame. So if you want to do this on a 5-minute time frame, you want to do it on a 15-minute time frame, it will follow. Whatever you trade in is going to follow the same price action.
I got you. Well, I do have one question. How often are you taking a trade? Like, are you, I mean, I understand you're waiting for your setup. Now, how long, on the time frame that you're trading on, how long does it take for your setup to formulate?
So with this time frame, it's gonna vary, but this is a swing trade system. So we'll stay in trades as long as, you know, I would say a week, couple of weeks. If we really catch a trend, about a month, sometimes even longer. But all you have to do is reduce the time frame. So if we look at one of our other systems here, is on a 30-minute time frame. All right, so that system might stay in a trade. Let's take a look here. I'll give you an example here. All right, it all depends. Now we want to stay in the trade, guys, as long as possible. That's how we make money. We make money in staying in the trades and catching those trends, right? Even if it's on a smaller time frame or a larger time frame. Okay, so we'll take a look right here. So this was a trade here. Okay, and this is the US 30, but don't worry about that, right? Just look at the time frame. So when was the 18th was on what? The 18th on Friday?
Friday, I believe.
Friday was the 18th. Okay, so Friday was the 18th. Here was the buy signal to get in here on Friday. And guess what? This is on the 30-minute time frame. So even on the 30-minute time frame, if it's in the markdown phase, and guys, they keep selling, we want to stay in. Why would we get out? Right? We want to stay in as long as possible. So here on Friday, this was a buy signal right here. Price is still holding. Here it is right now, trading in the markdown phase. We would just hold it, and we would get out when the price does what? Breaks what?
Market structure or support.
We're trading down, so it's a trick question. We would get out when the price breaks resistance.
When it breaks resistance.
Yeah, when it breaks resistance. So Jamal, even on a smaller time frame, don't get hooked up. Don't let the time frames mess you up. Even with the time frames, a smaller time frame, we can even do a 5-minute time frame. Let's see a 5-minute time frame here. Oh, I hate those smaller time frames. Let's see a 15-minute.
But it's smaller time frames. Like during a session, like say the London session, I can take like 2 or 3 trades.
Absolutely. If you like that, you know, that's good. That's a lot of action, but that's good. That you can do that. Everyone you can trade different. Just it doesn't matter. The idea is this, right? It doesn't matter the time frame. Okay, every trading instrument will go through those 4 market phases. Okay, so Terry, does that help a bit?
Yes, absolutely, David. Thank you.
Okay, very good, very good, very good. All right. Any questions on this stuff? Any questions? Any more questions on this?
So when you're trading like Forex, even Bitcoin, is there like trading like seasonal tendencies that you look at also?
Seasonalities. I mean, yeah, there's some. Jamal, wow. Okay, good question. There are some seasonalities, okay, especially with equities, with Forex. I don't know if it's too early yet to as far as cryptos. Cryptos right now is following the equity markets is what it's looking at right now, the equity markets. But there are seasonalities. Okay, so the one big seasonality is for equities. All right, and we watch equities pretty closely. So if you guys look here, all right, so this is the Dow, the S&P, the NASDAQ, and the one big equity in equities is the fact that if you guys have ever heard of selling May and go away, All right. So sell in May and go away. That's a big seasonality. All right. Where traders are done for the summer, right? They're done for the summer. The markets are usually light, and then they come back in October and they start buying again. Okay.
Now,
Forex has some seasonality also, but we don't really look at Forex as we look at the dollar. Okay, so the dollar will give us a big indication on how Forex is doing. So if the dollar is consolidating on or flat, all right, that will give us a direction of Forex, basically volatility, right? If volatility is low or if it's high, all right? That's our main concern with Forex. Is it moving or is it consolidating? All right.
gotcha. And when you say sell in May and go away, does that mean sell and get out of your trade or to enter a sell?
Selling to get out, but that's just seasonality. That's just it's a big seasonality, but that sometimes it doesn't hold true, right? There are times when we've had months in the summer when the market has done really, really well. But for the most part, we want to be out of the markets. We'll always look at the price action to tell us what's really going on in the market based on the price action. But if you guys look back, every market crash, I would say 90% of the market crashes that are out there. Okay. There's a good book, Jamal, that you might like. If you and I have those books. It's called the Trader's Almanac. The Trader's Almanac, if you want to do some research, and it will go through a lot of the seasonalities. There's one for equities, and then there's also one for commodities. Okay. Commodities will go with Forex also. Okay. But if you guys, a good thing to kind of keep an eye on, especially for equity traders, right? Stock traders, is it's good. It's good to know this. A lot of traders don't ask about that, a lot about seasonalities, but it's good to just keep in mind. We don't trade on seasonalities. But it's good to know. Most crashes, so 9/11, right? The .com crash, most of your crashes will happen in the summer months. Okay, so August, September, all right, September. And what happens is this, right? Usually there bad news happens, but the markets are light. So traders are not in the market to hold the market up. So you're gonna find there isn't a lot of liquidity in the summer months. So traders are usually away, right? On vacation during the summer months. So that's when most of your market crashes will happen. So the knowing that helps a lot. Okay, so Jamal, to your question, right? That's a good place to start. Okay, but we always go back to our price chart. Okay, because seasonality isn't always accurate. All right, that makes sense. Does that help? I know it's a long answer to your question there. All right.
David, I went ahead and signed up for your Tuesday class so I could learn more about this.
Oh, very good. Yeah, keep coming, guys. Keep coming, right? This isn't there. We do this 6 days a week. All right. And the reason we do this is because you want to keep getting this information kind of reinforces, right? Even with our current traders, it keeps reinforcing the same information. So yeah, keep coming. Peter, your hand is up. Do you have a question?
Sorry, no, I don't.
Oh, okay.
I actually have a few questions.
Okay, Madison, go ahead.
Okay, and this isn't just a question for you, David. This is also a question for everyone else here that trades. What hours does everybody keep so that they can trade during optimal trading times for the market so that they don't miss the right trading times. Because I know everyone has to be awake to see those times when the market, you know, breaks resistance or when the market breaks support so that they can sell and buy on time.
Anyone wants to answer that?
Sure.
Madison?
Yeah.
I would say the most volume come in the different sessions, and the most volatile volumes would be the London session, and I would go anywhere from like 2 to 5 o'clock, 5 a.m., 2 a.m. to 5 a.m.
Okay.
And I would say the New York session, and that start from, for Forex, I say it started at 7 and it could go till about 11 when you want to actually get out of the trade, because between like 11 and, well, with Forex from 11 to the next Asian session, I mean, it's just, you can see trades during that time. It just depends on what's on the calendar, like if it's FMC or if it's NFT day or whatnot. Not NFT, but non-farm payroll. And let's see, for equities, for indices, I would say a good time to trade indices would be between, and indices is like your NASDAQ, your US 30 Dow, and the S&P. I would trade that between, well, I look for trades between 8:30 to 11 o'clock in the morning. And then in the afternoon, don't trade between 12 to 2, but you can look for trades again for the indices between 2 and 4 o'clock.
Okay. So if you don't mind me asking, like, what time do you sleep? Like, if you're going to be awake at 2 a.m. to 5 for the London session and Forex, and 7 to 11 for the New York, like, that's not a lot of time to sleep between 5 and 7.
That's very true.
Yeah. Like,
But
what do you do?
It
And you need
depends
to
on
be
what,
awake.
it depends on
like,
what fits your schedule. So you can trade all those sessions and be super tired. But then again, you know, if you usually sleep during, depending on where you're at in the world, if you sleep, you know, during the London session, it'd probably be better to trade a New York session.
But like, I'm asking like how you do it. Like, what do you do?
For me,
he doesn't sleep.
I'm trying to learn from other people's ways of doing things. So
Gotcha.
I hope it's okay if you share with me what you do.
No problem. For
Because
me,
I'm completely new.
I got you.
Me too.
For me, like, it depends on, like, if I'm trading in Forex and I'm trading the Euro USD and I see something on the economic calendar, I would usually trade that during the New York session just because that's when the news is going to hit the highest. Now, if it's not that much news, then sometimes if I'm up, I'll trade the London session. But I work also during the week. So, you know, sometimes I don't trade the London session just because I know I'll be a little sluggish the next day, but I'll trade the New York session because I have a time where I can trade the New York session, enter a trade, and still do my work because I know where my actual exit is going to be, or my target is going to be, where liquidity is going to be for me to actually exit out of that trade.
Okay. Okay. So
Very
you
good.
keep up with your trades while you're at work.
Sure. I work from home right now due to COVID anyway, so it's easy.
So it helps. Okay.
Anyone else want to add to that?
Well, I just had a question about the scalper, David, if you don't mind, please.
Okay, the monster scalper.
Right. Do you get that when you know, register for the class and sign up as a student? or do you have an organization that people trade with that you're privy to that scalper?
Yeah, so if you guys, that's a good question. Hold on one second here. I'll pull up the website. So these are that Monster Scalper, that's an automated trading system, okay, that will give us the buy and sell signals, okay, and our support and resistance lines so that we don't have to draw those out manually, okay? So let me pull up the website here. So I'm going to share my screen here.
Okay, thank you.
All right. So do you guys see my screen? Terry, do you see my screen?
Yes, David, thanks.
Okay. So this is our website here. All right. And it's called Monster Trading Systems. Okay. So monstertradingsystems.com is the web address. Okay. And what we do, we provide the classes here that are free, right? So we provide the classes, like I said, 6 days a week. And then we also provide coaching, one-on-one coaching, okay? One-on-one coaching. We do 4-hour coaching. We also provide books. These are a couple of books that you guys want to have in your library, okay? It's we give these books free to our traders. The first one is Trading in the Zone, guys. So write that down, Trading in the Zone. All right. And then I'll finish with this information here. I'll finish with this. Okay. So Trading in the Zone, it's all about your mindset, right? 90% of your work, and sometimes I say, 99% of your work will be done with your mindset. Okay. So the one of the best books I think on the subject is Trading in the Zone. All right. So there is you guys you can get it on Amazon. There's a free audio on YouTube. So you can just type in Trading in the Zone on YouTube and you can listen to the free audio book. You can do that tonight. All right. And when our traders do our one-on-one coaching, they get that book, okay, free of charge. And we kind of go through some of it. The next book we highly recommend is Trend Following by Michael Koval. Trading in the Zone is by Mark Douglas. So Trading in the Zone by Mark Douglas. The next book we recommend is Trend Following, okay, by Michael Koval. These are great books, guys. These 2 books right here changed my trading years ago, especially Trend Following. All right. And our traders like those books. Okay. So we provide automated trading systems, Terry. So we provide for a price though. These are, you have to purchase this, right? Or when you're ready, right? We always recommend doing the one-on-one coaching first. But we do have different, if you see here, we have different trading systems for different markets here. Okay, so we have a variety of trading systems, coaching, a bunch of stuff. Okay, when the trader is ready. So we don't recommend just getting the trading systems. Want to do some coaching first.
Yes, of
all
course.
Right. And then we can look at a trading system that will fit your needs, okay?
Okay.
In the market. So we do have those available. All right. So the website is monstertradingsystems.com. You guys have a chance to just kind of go through it. Right here is a bio about me. I've been doing this for about 25 years, guys, and I'm still not tired of it. All right. Yeah. It's pretty, I love this stuff. So there's a little bio about me right over here. So you can go through the website and pretty good information. Another area that's good to go through is training. We have a ton of training videos, right? A lot of training videos. Like this training tonight will be on the site this evening. So every training video will be recorded and it's right here. So this is a great area to go to get a lot of good information. Okay. So I will play around with the website, and then we have another here with some results. So I know traders like to see performance and results. This is results. So right here, trades on the website, you can click here. And this is one of, this is on our Sniper Trader, one of our systems. We actually list the trades because we actually give the traders the trades to take. So you can see, get an idea of the performance here. Okay, so just spend a little time on that. All right. Any other questions?
No.
Yeah, I have a question.
Okay.
With your one-on-one training, what do you cover? Do you like start at the very, very beginning with a person and go from there? Do you cover everything?
Yeah, that's a good question, Madison. It depends, right? So every individual is different. Okay, so every individual is different. Every individual, every trader will come with a different level of experience. All right. So it's going to be different. All right. So the approach that I take is I look at traders' strengths. Okay. So I look at what traders are really good at. All right. And I try to maximize that.
Okay.
And then and then traders have different personalities, right? So some traders might be a type A personality. So we might look at different tools to help them. Some traders are more laid back, right? So that's critical. But what I try to do with the trading is try to fit the trader. A lot of it is when we do it is all about the mindset. This trading is not for everyone. Right. Yeah, trading is not for everyone. But there are certain traits that will help you as a trader become really, really good. So my job is to kind of uncover some of your gifts, and everyone is unique. Everyone is different. Everyone has unique strengths. So that's my job, to kind of uncover that, and then try to get you to think a different way about trading. All right.
Okay.
Trading is very different. It's very different from anything that we'll do, right? Because the difficult part of trading is that we put in capital to work, right? We put in our hard-earned money to work. So whenever we put our money to work, right, into the market, there's a different level of emotions and anxiety, right? And some of the traders that you guys that have been trading, you know that, right? Right? When you start trading with money and it's your hard-earned money, boy, it becomes very, very different. Okay. So everything you thought you would do, right? Everything you thought you wanted to do in that trade kind of goes by the wayside once you've got capital to work. So we spend a lot of time on your emotions and kind of really getting into the reality of trading. Okay, but good question, Madison. Very good question.
Okay, thank you so much.
You're welcome. Guys, any other questions? I know we went all over the place this evening, but it's good. It's good. That's how we learn. That's how we learn.
Just want to say appreciate you for holding this webinar and giving out your knowledge on the market.
You're welcome. You're welcome. Keep
Yes,
coming,
thank you,
Jamal.
David.
You guys are welcome. We have another one all through the week. So Monday, Tuesday, Wednesday, and Thursday. And I think this Friday we have one also. All right. So keep coming, guys. This is how you learn, okay? This is how we all learn. So thanks for coming. I hope you guys have a great evening and a great week of trading. Hopefully Forex, we're looking for it to hopefully pick up with some volatility this week. Last week was kind of flat, very, very flat. So we'll look for some volatility this week. All right. If you guys need to contact me, if you want to get in our database where you get alerts from us, you can just send me a message on the meetup or my direct number. I'm always available, guys. I'm always available. 407-733-0185. All right. Just send me a text. All right. 407-733-0185. All right, guys, take care. Have a great evening, and I will see you guys later. Take care. Bye-bye.
Thank you. You too. Good night, everyone.
Good night, guys.
Thank you, David.
Thank you.
Good night, everyone.